Hey, what's up guys, Houston here. And for those of you just finding my YouTube channel, welcome. Please remember to subscribe and hit that bell. And for those of you that's always supporting me and following me, salute. And for my Patreons, a double salute. I really appreciate it. Now, today's video, we're actually going to be talking about startup business loans. Not just any type of startup business loan. We're going to be targeting startup business loan for people that have bad credit, no collateral, no personal guarantee. Now, a disclaimer, I must tell you, like a lot of these lenders that are out here that's willing to give you a loan and you have bad credit and you don't have any collateral, the situation may be that the interest rate may be through the roof. So I'm just being transparent with you so you understand what's going on. But that being said, let's talk about some of these startup business loans that offer loans to people with bad credit. Okay, so you have it's called business advance. Okay, it's called business advance funding, excuse me. Now, here's the thing with business advance funding. They want you to be in business at least 6 months. Alright, and they want your revenue to be at least $5,000. Okay? And you can't have an open bankruptcy. Alright? So if you have an open bankruptcy, they won't accept you. The bankruptcy has to be discharged. Okay? So just keep that in mind. Now the second one is Fundbox. Okay? Now with Fundbox, this one is kind of iffy because I'm still trying to figure them out. But it's saying 3 months and no revenue and no credit check. So I don't get it. I don't get it, but this is what they're saying. So if any of you guys ever use Fundbox, let me know. Put it in the comments. What are the real requirements and stuff? Because it's for me to start a business and have no revenue in the business and they're willing to loan you money. It doesn't make any sense, especially if you have bad credit, okay? But for those of you that, again, if you ever used them, let me know, all right? Now, you have Shield, S-H-I-E-L-D, excuse me, Shield funding. Alright, and so with Shield funding, their situation is you can be in business for 2 months, right? But they want your revenue to be about $8,000 a month. Okay, so understanding that in terms of if you have 2 months of revenue, you have 2 months in business, at least $8,000 per month. They're willing to loan you at least the minimum of $5,000. Okay, so that's Shield funding. All right, now you have Seek Business. Excuse me, it's Seek Business Capital. Okay, and again, like I said, for these here lenders, because they are looking for subprime borrowers, people with bad credit or whatever, their interest rates is going to be through the roof. So just keep in mind, guys, when you're looking at lenders like this, they definitely going to be hitting you over the head. So when you're trying to pay it back, all right. Now they're saying no revenue and no time in business, right? So if you don't have no revenue, no time in business, the only logical thing that I can see, either you may have a real estate investment deal on the table, or you may be trying to buy a business that has equity in it or something like that they can leverage off of, or you may have a co-signer that has good credit. So those are the things that I'm looking at. But again, for some of you all that may have used some of these lenders, let me know. Have you used these lenders? What do you think about it? Was it that they just, the interest rates is just too high? Just let us know in the community by putting a comment below, okay? Now, you have Business Advantage lenders. And it's a platform, right? Now, with Business Advantage lenders, they're saying that $3,000 in revenue. They want you to have at least $3,000 in revenue. They want you to be in business for at least 3 months. They have two different plans. They have a $3,000 3-month revenue. Then they have a 6-month plan as well. So with the 6-month plan, they want you to have at least $5,000 in revenue. Okay? So it seems that these here companies, you don't have to be in business that long, but you have to at least start generating revenue. That's the reason that I continue to stress to you guys in terms of when you're talking about business credit. What are you talking about? Term credit, or are you talking about business funding? And the reason that you want to start depositing, making weekly deposits into your business bank account, so that you can probably approach lenders like this to start showing that you have some type of bank statements, that even if you're loaning money to your business from your paycheck, so that way you can start funding your own process of being able to build up the business credit without term credit. Okay, so that's the reason that these lenders are here, because they understand there's a lot of people that may have a business, or you may have a business but it's a side hustle. You never ever set it up as a business. You may be selling hot dogs or shining shoes or whatever, you know, or selling clothes out of your trunk or something. You're just selling stuff, but you're not set up as an official business. Now, if you have questions about properly setting up the business, click the link and check out 3-way funding. But at the same time, this is one of the reasons that a lot of people in the communities have not been able to qualify for business funding, because they're making money, but they're not showing money through bank statements, okay? And this is how you actually be able to get not just some funding, but a lot more funding, as well as filing your business taxes, okay? So this is why this is very important, all right? So here's another one. It's called Clarity Capital. All right, so with Clarity Capital, their thing is 3 months and $10,000 in revenue. Now, if you're 3 months, $10,000 in revenue, you may be able to qualify for some of the other lenders, in which I'm going to also talk about some of those other lenders in a moment. But this is some of the things that I want you all to understand, and I'm going to reiterate this, that in terms of when you're dealing with these type of lenders, expect to pay double-digit in interest. Okay, so just keep that in mind, because this here is again, these are subprime lenders. Okay, so just keep that in mind. That's when you're just trying to get off the ground. You got an idea, or you got a business that's making money, but you may need to buy some extra equipment or do some extra advertising or some more inventory. All right. You have One Main Financial. Okay. Now, again, with One Main Financial, 3 months. $2,500 up to $7,500 in revenue. Okay, and so some of these I'll put a link below so you can check them out on your own. But if you used any of these lenders, again, put a comment below. Let us know, how did it work out for you? All right, I'll share a situation. All right. back when I stayed in St. Louis, I was friends with this guy that had a store in the mall, right? And what ended up happening is that he kept running out of inventory, right? So he went out and he ended up going to, again, like one of these third-party lenders and stuff. But instead of him thinking, well, not only would I buy more inventory, he ended up taking the money to open a second location. Big mistake. The reason is, if you have one location of business that's already struggling, you can't keep up with supply and demand, then you know that the other one's probably going to struggle as well. And that's exactly what ended up happening, that his business, he lost both of his businesses. So again, I know a lot of you guys may have restaurants or you have clothing stores and stuff and you're looking to expand or whatever. I would tell you, I would make sure that I'm at least profiting at least for 3 years straight before I think about opening up a second location or whatever, because you can really end up putting yourself in a very bad financial position and losing both businesses, and it happens a lot. Okay, now here's another company, Brass Financial. Okay, and with Brass Financial, they said it's okay if you don't have no revenue, right? They're saying it's okay you don't have any revenue in the business, all right? So again, for me, I just don't get it. It's like, if you're saying it's okay to have bad credit, no collateral, no revenue in the business, okay, how's this going to work out? You know, how are you going to, I guess it's no stated income, basically what a lot of them are going off of, no stated income. You know, but at the same time, they're getting you on the hook to agree for a small loan, but you're paying double digits. So that little $5,000 that you may borrow, it may cost you almost $10,000 to pay it back. So you just have to be careful with these type of lenders and stuff. Do your own research. Reach out to them. And again, for those of you that may have used these third-party lenders, let me know what is your opinion of them. Now here's a couple that we are familiar with. You have the PayPal Loan Builder. Okay, now with the PayPal Loan Builder, they want you to be making at least $3,500 a month, which is about $42,000 a year. Okay, and so as a matter of fact, with the PayPal Loan Builder, you don't have to have a PayPal account. That's another interesting thing about this here PayPal Loan Builder, because a lot of people, they see PayPal and they're like, well, I got to have a PayPal business account in order to get this loan. Not with the PayPal Loan Builder. You don't have to have a PayPal account in order to get qualified, okay? Then if you are another online person, you may be using like Stripe. Stripe offers loans. And then of course you got Square, right? So you have these other platforms that if you're getting revenue, bringing in revenue using their platforms and stuff, they would actually loan you money regardless of your credit also. So just keep that in mind. All right. Now, here's the thing about it. If you're trying to get money from the banks, all right, here's some things that you need to know that is very important. All right. When they ask you in terms of what's the loan for, okay? When they ask you, what do you want to do with the money? Do not say, well, I'm planning on doing cryptocurrency, I'm planning on taking on this real estate deal, unless it's a lender that actually focuses directly on real estate, then that. But the general answer you want to say is that you're probably using it to expand your business for its advertisement, or you making you want to buy more product, okay? But you never want to put yourself in a position as if you're going to take their money and gamble with it, basically. And so that's the reason I said that, like with real estate and stuff, people try to get real estate loans from traditional banks and stuff like that. It's a high risk SIC code because they don't know if they're going to get their money back. All right, so that's the reason when I tell you, if you're going to get into real estate, flipping, development, or whatever, you either hard money lenders or go to it's a certain set of loan brokers that you should be dealing with when it comes to real estate. Okay, now when they ask how much money you want to borrow, here's something else you have to understand. You never give them an answer. So you always say, what's the max that I can borrow in the position I'm in now as a startup? Okay, so you let them tell you how much that they're willing to loan you. You don't tell them a number. Let them tell you a number. Okay, and then when they come back with that number, see if that number, if it's too low, see if that number is possibly able to negotiate. A lot of times with lenders and stuff, they may offer you a certain amount, right? And then you say, well, can I have some more, whatever. Well, the thing about it, again, if they don't have a relationship with you, they may just draw the line right then and there. Now, I have heard of people that went to lenders and stuff, and the lender may only gave them $15,000, $2,000. They said, well, I ain't gonna do nothing with that. And I always tell people, take the money. I don't care how low, if it's $500, take the money. The reason is because if you can show them that you can actually leverage that $500, use it and pay it back, use it and pay it back, over time you're building a relationship with them. And so they'll look at that. Okay, and it's like their internal scoring, in which we're going to talk about that in a new Navy Federal video that I got coming out to explain that for us about the internal scoring. But at the same time, for you guys, whenever you go to a lender and they offer you a small amount, I always tell you to take the money. Take the money. Make the deposits, make your weekly deposits, make your payments and stuff like that, so that you can build a relationship. And so the more transactions you have in your business bank account, they would have enough data to actually trust you with more money. All right, so this is Houston with three-way funding. Again, for those of you that may have questions about setting up your business or about your personal credit or something, click the link below and you can set up a consultation. For those of you just finding the YouTube channel, welcome. Please don't forget to subscribe. And for those of you that's always supporting me, as always, salute. Hello? Really?
What?
I done stopped talking 30 minutes ago.